The Treasurer Josh Frydenberg joins us live. Treasurer, thank you for your time. We heard from the RBA Governor last night. He essentially said in terms of rate cuts, he's got 2 shots left in the locker. He wouldn't go below 0.25%. How does that sit with you?
Well, look, obviously decisions about monetary policy are those for the Governor. But what we do know is that the Australian economy, Laura, continues to grow. We're in our record 29th year of consecutive economic growth, and the lower interest rates, no doubt, have helped the housing market where prices have stabilised, clearance rates are up. That's important because people's confidence in the value of their home then plays into their household consumption. But we've also seen Australia maintain its AAA credit rating, and we've seen a real resilience in our labour market with more than 1.4 million new jobs being created. So we'll do outside of the job, namely on fiscal policy, and we've seen infrastructure projects being brought forward, and the RBA Governor will handle monetary policy.
Well, if the RBA does go down the path of quantitative easing, what does that say about our economy?
Well, I think the Governor's saying that QE is not likely, is the way that it's being interpreted. But what he is saying is that he's going to continue to watch the interest rates. Okay. And obviously we're now seeing a cash rate at a record low of 0.75%. But what we do know, Laura, is that more than 50 central banks from around the world have cut their interest rates. And so obviously the Governor is very closely watching what other countries do because we're not immune to that global movement downwards in interest rates.
Can you see any economic circumstance where you might think about bringing forward that second round of tax cuts earlier than 2022?
Well, what I've said on this before is that the Coalition is always the party of lower taxes, and we took to the election a big agenda to cut taxes, and we've delivered on that. We've legislated through the Parliament. That was in contrast to our political opponents who took $387 billion of higher taxes the election and are still holding on to those policies. So they may have been Bill Shortens at the election, they're now Anthony Albanese's. But when it comes to our tax agenda, what we're focused on is delivering the tax cuts that we've already legislated, which will see the abolition of the 37 cents in the dollar tax bracket, and we'll see people earning between $45,000 and $200,000.
But Treasurer, as you say, you're in charge of the fiscal levers. Surely you're keeping this option open to yourself to pull on a little earlier.
Well, we'll always be the party of lower taxes, but when it comes to our tax agenda, our focus is on delivering what we've now legislated through the Parliament.
So in what circumstances might that lever be pulled on earlier, though?
Again, as you know, the timetable for the further rollout of that tax plan was legislated in the Parliament.
Sure, but is that a flexible timetable?
We'll continue. We'll continue to always look for opportunities to lower taxes, and as you know, not only for income earners, we've also cut taxes for small businesses with turnovers of up to $50 million, and we've also extended the instant asset write-off again to businesses with a turnover of up to $50 million, and we've extended that to $30,000. And that tax relief and those tax incentives have been used by hundreds of thousands of businesses across the country.
And now you are putting forward a business growth fund, which was a promise at the election. The big four banks tipping in $100 million each. Small fry for the big four, you've got to say. But how many businesses would have access to it? And why is it just a $500 million fund? Is it all that's needed?
Well, $520 million is what we've put together initially, and we hope to grow it to $1 billion. And the model is based on a growth fund that operates in both the United Kingdom, which is £2.5 billion, and one that is based in Canada, which is of a similar size to Australia. And the whole idea is that if you've got a business that you may want to grow, expand, to innovate, and to buy new equipment, but you don't want to increase your debt profile, well, therefore, this fund offers the opportunity to get a capital injection from equity to get an opportunity to partner with the Growth Fund, who will take a minority stake in your business, and then you can actually continue to grow without increasing your debt. And that's an attractive option to many businesses. I visited an engineering business, for example, that was family run, that was participating in the defence industry supply chain. And when now, for them to continue to grow, they don't want to take on more debt. This Business Growth Fund would be an attractive option. So between $5 and $15 million will be the injection made by the Growth Fund, and obviously there'll be additional support provided by it.
And when do you hope to pass it through the Parliament? At the end of by the end of this sitting fortnight?
Well, we'll be introducing the legislation to the Parliament next week, and hopefully it receives bipartisan support, and we'd like to see it up and running by the 1st of July next year. But this is an important opportunity to back small business. It builds law on our other initiatives to back small business, like cutting taxes, the instant asset write-off, ensuring businesses get paid on time. We've established a $2 billion securitisation fund to build liquidity in the lending market for small and medium-sized businesses, and we're cutting red tape for small businesses as well. So there's a lot of work that's being undertaken to ensure that the more than 3 million small businesses across Australia that employ more than 7 million people get the support of government to grow, to innovate and to hire more people.
Why didn't you call for Brian Hartzer to go? Why did it take leaks, really, from senior executives for him to finally fall on his sword?
Well, I made very clear on Sunday that these issues tend to have a momentum of their own, and where boards start is not necessarily where boards finish. And as you can see in the subsequent days, with the announcement of the immediate departure of the CEO and the brought forward departure of the chairman, that's exactly what had happened. And we've made very clear all along that these alleged breaches by Westpac of our anti-money laundering laws are very serious matters indeed. With the 23 million alleged breaches and involving issues involving allegations of this nature.
Well, should the board go? That being said, should the board be cleaned out?
Well, obviously, there must be accountability. The fact that there has been now this movement by both senior executives and at board level, and as to what further actions will be taken at board level, I do note that they've got an AGM coming up on the 12th of December, and the shareholders seem to be very vocal in their desire to have needed change.
And it's right that Westpac's been locked out of the government first home loan deposit scheme. Reputational damage.
Well,
would you be concerned about that?
Well, look, that's a matter for NIFIC. Under that program, we will be supporting 10,000 first home buyers every year. We'll see NIFIC choose two of the big four banks, and then also some of the smaller lenders, and those are matters for NIFIC, not for the government.
Josh Frydenberg, appreciate your time.
Always good to be with you.